Crypto capital of the world. Crypto technology.
Crypto.
The answer is crypto.
Bitcoin conference.
Bitcoin.
Ethereum, crypto seems to be all the rage recently. Is it 2021 again? The trends for Bitcoin, Ethereum, and crypto are beginning to surge again. Every news organization is discussing crypto policies. Bank CEOs are shifting their stance on whether people should buy Bitcoin. And Trump just signed a crypto bill into law that some are saying will change the financial system in America. This feels like a total 180 from his previous time in the White House in a totally different environment than the previous administrations. Less than 3 years ago, 2022 was the year crypto came crashing down to earth. 2022 was a hard year for crypto, but it may have been just what the industry needed. In November 2022, CZ from Binance uncovered that FTX was not as solvent as they claimed to be and led to one of the biggest financial news stories of the past couple decades.
Truth is, Sam Bankman-Fried is a liar and a crook.
It's because of the crypto exchange platform FTX.
FTX notoriously crashed, SBF went on a press run only to end up in prison next to the diddler, and crypto was finally done for good, right?
Over $150 billion. In 3 days, that's how much the world's 15 largest cryptocurrencies lost in market value.
All the ways that crypto broke in 2022. No one wanted to touch crypto. Bitcoin tanked, Ethereum tanked, altcoins basically went to zero, and Operation Choke Point 2.0 was behind the scenes ensuring the industry couldn't survive. Warren Buffett wouldn't buy all the Bitcoin in the world for $25. It doesn't produce anything. The sentiment from the power investors and fund managers was that crypto was too risky, it involved too many fraudsters, untrustworthy exchanges, and it was all just a giant Ponzi scheme that didn't produce anything. But a Trump presidency has seemed to indicate a revival to the crypto asset class. In his first week in office, President Trump signed an executive order intended to support the growth of the U.S. crypto industry, signaling an intention to approach crypto and blockchain regulation with a lighter touch meant to keep the United States at the forefront of global innovation in these areas. Fund managers are now allocating some of their portfolio to Bitcoin and crypto. To go even further, their recommendation for how much you should invest has altered drastically as well.
You are now saying that folks should be allocating 10 to 40% of their portfolio to crypto.
Some say between 1 and 10%, while others are recommending 5%. It's very clear that the narrative has changed. But then came a massive curveball with the Trump meme coin.
Trump has made at least $350 million from this meme coin so far.
Trump's motives are generally self-serving, but the recently signed Genius Act is a significant step forward for the industry.
Stablecoins are the ChatGPT moment for crypto.
Is crypto the financial savior some believe it to be, or is Trump just using this digital asset class as a way to generate profit for his family? Trump holds roughly $900 million of liquid assets, about half of which come from crypto ventures. About $1 billion, according to Forbes calculations, lifting his net worth to an estimated $5.6 billion. Trump reports more than $600 million in income from crypto, golf, and licensing fees. Crypto has been a massive profit center for the business of Trump, but will his conservative base like the next report? Trump eyes executive order to open up retirement funds to crypto.
The reason we got into crypto, and we're all in on crypto, and we're doing American
Bitcoin, it just seems like a scam. I don't like it because it's another currency competing against the dollar.
The Biden administration was strongly opposed. The Obama administration had done nothing about it. Even Trump in 2017 was opposed to Bitcoin.
So I think it's, fool's gold. I think they're trying to convince people to buy it instead of gold.
Buffett on cryptocurrencies. I can say almost with certainty that they will come to a bad ending. The crypto PR team got fired a long time ago. Seemingly every month, bad news would hit the industry or an established investor would call it a scam. And then came NFTs and the metaverse. These were the darlings of the 2020 to 2022 cycle. This chart shows the number of NFT transactions. Very clearly, there was a huge surge in 2021 with a massive crash in the years following. Most of the audience of channels like mine will tell you NFTs are a scam, that every single project is just a way to launder money or rug pull the creator's audience. But the hype really hit a crescendo when this happened.
I didn't know how into NFTs you were. Can you explain what an NFT is? This is your ape. Are we debuting?
It's really cool. Well, it's an NFT series that I'm doing with Super Plastic.
Paris Hilton isn't exactly known for her investing savvy, but this digital artwork being a segment on a mainstream media mass corporation show indicated that NFTs officially were trending. This video is sponsored by Aura, so I can tell you about one of the most disturbing trends in America, data brokers. This is one of the biggest data brokers around, and they claim to be selling a staggering amount of our personal information. Just look at how much data they have collected. This single report is 11 pages long. These guys are making billions selling our information to anyone who wants it, and spammers definitely want it. I've had to change settings on my phone in order to adapt to the amount of spam calls and texts I receive from people having my number connected to my real estate license. It frustrates me, but there's no solution, or at least I didn't think there was a solution until I started using Aura. Aura finds the data brokers exposing your info and automatically sends opt-out requests to get it taken down. And yet, there are a few other services that do this too, but none of them do as much as Aura does for you. Plus, Aura actually helps you out if a scammer or criminal uses this information to steal your identity. They cover you with up to $5 million in identity theft insurance and 24/7 US-based fraud support to help you fix it fast. You can try Aura free for 14 days at aura.com/Spencer. That's more than enough time to start getting your information removed from these sketchy sites. Post Malone was buying NFTs in a song with hundreds of millions of views on YouTube. These things called Bored Apes went mega viral as celebrities like Jimmy Fallon, Logan Paul, Steph Curry, Snoop Dogg, and Eminem had allegedly bought one. Around this same time, FTX began a mega promotional push linking up with Tom Brady, Steph Curry, and financial YouTubers to increase their market share. Then you had the Super Bowl ads claiming that crypto was the next big frontier. Crypto was everywhere. There was a huge contingent of people who were saying, whoa, 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 what is this crypto thing, and why is this massive scam getting such mainstream attention? Well, the critics had a I told you so moment. FTX infamously crashed in about 4 days. The mega popular Bored Apes lost 93% of their value from the peak.
Bro, my World of Women collection is vast. That project is
great. Missed it.
The project
I'm
is
pissed
blowing
because
up.
I was not in the...
I told all of you!
I mean, it's a World of Women, a project I'm very into.
The popular World of Women NFT project crashed over 99% as well. The Nelk Boys raised $23 million for their NFT project in a couple hours, only to dismiss the project years later and never deliver on the promises. Many people's understanding of crypto is that it's a safe haven for criminal activity, it's used to launder money, it's all a Ponzi scheme, and around this time, they weren't exactly wrong. Less than 3 years later, the President of the United States is possibly going to allow fund managers to allocate your retirement money into crypto. Is this something you need to be worried about?
A lot of volatility. I'm not discouraged by the volatility in Bitcoin because the volatility makes it the most interesting asset in the world.
If you listen to enough Bitcoin maxis, you'll often hear the phrase, Bitcoin's volatility is a feature, not a bug. The purpose of a 401k is to provide a reasonably safe investment that will grow over decades and then provide a very stable and expected dividend return during retirement. Does it make sense to combine crypto, an asset that many people consider a scam or wildly volatile, with an investment vehicle that's supposed to be reasonably safe? A closer look at Bitcoin's volatility by Zach Wainwright. This chart shows the 1-year volatility of Bitcoin to be significantly greater than many other popular investment vehicles. This isn't breaking news, and it certainly isn't unexpected. This chart looks similar to a lot of crypto coins with rapid price increases followed by massive drops in periods of minimal price movement. That was the all-time chart of gold. There was significant volatility in the 1970s when the US went off the gold standard, with a huge price jump from around $200 an ounce to $800 an ounce. Similar to Bitcoin, there were probably people who 4x'd their investment in just a couple years. And also similar to Bitcoin, there was an immediate price correction that saw gold drop from around $800 an ounce to around $420 an ounce in a couple years. But unlike Bitcoin, these investors needed to wait around 25 years before seeing a return on their gold investment.
The best investors in the world have been thinking about volatility for decades. Charlie Munger once said, "Volatility is not a risk we care about. What we care about is avoiding the permanent loss of capital."
Bitcoin detractors will claim the volatility is too much and it's too risky, but seem to ignore how much volatility exists within the safer asset class, equities. Krispy Kreme reached a high of $12.40 per share on September 17, 2024. On June 25, 2025, just 9 months later, you could buy one share for $2.57, an 80% discount. Open Door reached a high of $34.59 a share in February 2021, dropping all the way down to 67 cents a share a couple months ago. And the volatility within the past month would make crypto bros blush. Look at Carvana's stock price chart. What about Tesla, the retailer Kohl's, and the once beloved DVD rental store Blockbuster Inc.? You can say I hand-selected certain stocks to fit a narrative, but if you analyze stocks in the S&P 500, you'll see that many of them have just as much volatility as Bitcoin or your favorite meme coin. As I was making this video, American Eagle released a new ad campaign featuring Sydney Sweeney, and the stock proceeded to jump 30% in a day. I understand why people claim that Bitcoin is too volatile or too risky for a 401k, but I would bet that you would be shocked at how many large corporations experience swings as volatile as Bitcoin.
First of all, Bitcoin's been appreciating at 55% a year for the past 4 years. Bonds are depreciating 5% a year. The S&P is appreciating at about 13% a year.
Would bring back American liberty and leadership and make the United States the crypto capital of the world. The Genius Act provides banks, businesses, and financial institutions a framework for issuing crypto assets back one for one with real U.S. dollars, treasury bills, and other cash equivalents.
We will now live within a financial system that has more transparency, 100% reserve backing that can be audited, and strengthens the U.S. dollar status as the world's reserve currency.
I also remain fully committed to my pledge never to allow the creation of a central bank digital currency in America. It won't happen.
This will continue allowing crypto to be decentralized, zero censorship, and personal liberty. Since some are still confused, what exactly are stablecoins and what's the benefit?
Consumers, vendors, and people all over the world will then be able to use those stablecoins for ultra-low-cost transactions that are cleared and settled in a matter of seconds rather than weeks and months, with the privacy, flexibility, and decentralization of cash.
Digital asset that will, I think, help to lower costs, lower risks in the market, because we can now move towards an instantaneous almost settlement of payment versus delivery for securities thanks to on-chain stablecoins.
In case this is still confusing, just imagine your physical US dollars as digital dollars that you can send anywhere across the world instantaneously. When you check out at your local Chipotle, the money will be transferred and settled instantly for both you and the vendor. If you need to wire money, you go to a bank, pay a ridiculously high fee, and sometimes need to wait a day for the wire to be approved. With stablecoins, you can send the money instantly with no approval needed from a stupid bank.
Instead of you having, if you're a resident of Venezuela or Zimbabwe or some other country where you either have an unstable economy or a corrupt government, now you can take your money and put it into a stable coin, which is backed dollar for dollar by the U.S. Treasury or U.S. dollars.
To be clear, I want the U.S. to remain the reserve currency status. I think a strong America is very important for the world, and I think cryptocurrency is helping the dollar enormously with things like USDC and stablecoins.
Our entire financial system is already digital, but the new laws being passed will allow for progress to be made in the crypto industry to push this sector forward even quicker. This is better for everyone.
There was a time I could call any single banker in New York City. They'd pick up the phone. I'd be able to get a loan for whatever real estate project I was doing across the street. Then we got into politics, and all of a sudden, they wouldn't take your call. Right. You couldn't get financing. We were debanked.
This all sounds great, but is Trump just making this push to appease the crypto industry to enrich himself?
The meme coin. Is that okay for your dad to have a meme coin?
One of the things that people do demonstrably question is they say this meme coin that your father has creates the opportunity for foreign adversaries to effectively funnel money.
The president probably shouldn't have a meme coin where anonymous wallets can send him money and theoretically pay him without the public knowing.
He was once a crypto skeptic, then he vowed to make America the crypto capital of the world. And
I think it's fair to assume that Trump becoming a crypto fan is self-serving in some capacity. The family seems to have fully embraced crypto with the creation of WLFI and its flagship product USD1 stablecoin. The Trump family project WLFI associated address added another 6,000 ETH today and continues to buy. In the past 6 days, WLFI has added 10,000 ETH. There's also belief that Trump and family now own around $280 million in Ethereum in total. And Trump Media recently bought $2 billion worth of Bitcoin for its treasury. One of the great elements of crypto is that every transaction is on the blockchain, so you can see where the smart money is investing right now. Do you really think BlackRock and all the smart money on Wall Street are buying Ethereum because they're skeptical of what's going to happen next? BlackRock now owns $10 billion of Ethereum. What's about to happen is exactly what happened last year. All the smart money was buying Bitcoin during the summer, and then they unleashed it at the end of the year. They're running the exact same playbook with Ethereum starting a couple months ago. But plenty of people still think crypto is a scam.
Who launched a meme coin? And to no one's surprise, rug pulled just hours after promoting it on X.
If your only understanding of crypto is through the various news stories like the hawk to a rug pull or the pastor who raised $3.4 million because God told him to create a meme coin, then I can totally understand why you think the entire industry is a scam. But understand that crypto is now a $4 trillion asset class attracting the smartest money in the world, governments, sovereign wealth funds, and Wall Street. Bitcoin is now the number 6 largest asset in the world, bigger than many of the top companies in the S&P 500. Ethereum is next in line as it serves as the layer the next generation of technology will be built on.
The largest beneficiary of the Genius Act is Ethereum because the majority of stablecoins are deployed on top of Ethereum.
I'm sure there's YouTubers who are still trying to convince everyone that crypto is a scam, but fade the smart money at your own discretion. But Spencer, the only way to make money in crypto is by dumping on someone else. If you're referring to influencer pump and dump schemes, then yes, a dump is occurring. But what does the stock market, gold and silver, residential real estate, Bitcoin, Pokemon cards, a Rolex watch, the 1967 Mustang you restored and now want to sell, all have in common. If you want to make a profit, you have to sell to someone who's willing to pay a price higher than you. All assets follow the same principle. In order for you to make money, you have to dump on someone else at a higher price. So really, why should you care what I'm talking about in this video?
I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years.
Saylor sounds insane if you haven't heard any of his speeches before, but Bitcoin has outperformed the stock market for 15 years. The stock market has actually lost over 99% of its value in Bitcoin since it was created. Because of MicroStrategy's likely inclusion into the S&P 500 and the amount of funds and ETFs buying Bitcoin, it's only a matter of time that everyone watching this video will have exposure to Bitcoin. I know this may sound like hyperbole, but everything is moving to the blockchain.
These decentralized platforms where you're not beholden to this, where you create efficiencies. As a guy that did real estate, why am I paying points in and out for title insurance that could be done on the blockchain?
I found Raoul Pal to be an influential and knowledgeable macroeconomics investor, and his charts are all showing that risk-on assets are about to experience another massive leg up, which means your favorite asset class, NFTs and meme coins, are about to make a massive comeback. The best example recently is Pudgy Penguins, one of the most valued IPs in the NFT space. Pudgy Penguins recently did a 10x from April lows to July highs.
Meme coins. You've seen them, you've heard the hype. Maybe you've even bought a few.
Leading meme coin launchpad Bonk Fun hits new record with $1.95 million in 24-hour fees. It's going to be hated, but meme coins are just an indication of general investor sentiment around risk assets. The floor price for Bored Apes is down to around 11 ETH, a massive drop from its high of around 150 ETH 3 years ago. This will probably be the second NFT collection to pump hard when the correction happens. The Trump meme coin will likely rally as well as all the other popular meme coins with large market caps that can be traded on Coinbase.
I think the 200 to 250,000 for Bitcoin still makes sense because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years.
We saw crazy predictions happen in the last cycle that never came to fruition, so I'm hesitant to say all of these crazy price predictions will happen, but it's important to analyze the trend. Millennials who are infuriated that boomers bought cheap houses 30 to 40 years ago are going to look foolish for not taking the chance to buy Bitcoin at $0.1 million. Comedy. TikTok. Gold is currently priced around $22.5 trillion. Many see Bitcoin as digital gold. Whenever Bitcoin begins taking market cap from gold, that $2.3 trillion number will look small.
I'm anticipating we're going to see trillions of dollars flowing into this asset class over the next 4 years. It's going to put Bitcoin at $500,000 by the end of the decade, in my view.
These numbers seem great, but we also need to address the idea of corrections.
This is the most important chart for you to understand, is that corrections are normal. You've just gone through a normal correction and you've managed to lose your minds, which is hilarious because we've had 7 of these. And last time around, they were bigger. Back in 2017, 28%, 39%, 38%, 27%. Nobody remembers any of those.
It's very normal for Bitcoin to experience 30% corrections in a bull market. I think Bitcoin will get to $150,000 easily sometime in 2025, and then retrace back down under $110,000 at some point. This is expected and normal.
So it's a proof of concept of what I think we can move the needle in crypto. And I think that's going to be the future of finance. It's going to be the future of banking.
Banks knew what blockchains were. They've all experimented with them, but didn't want to use public blockchains like Ethereum. Last year, when all of that started to change, BlackRock started tokenizing their money market mutual fund. The ETH ETFs got approved and the regulatory landscape started to shift. Now is the time to accelerate. Now is when we're going to have the adoption moment for Ethereum.
I understand why people are fearful of the contamination of their retirement portfolios with this scary new thing called crypto. If you spend any time researching the sentiment on Reddit, you'll see that people are scared of this possibility and in fear that people will lose the entirety of their investment. Please understand that these same people will be buying Bitcoin at $500,000 a coin when it finally feels safe. Here's more popular stocks that have experienced massive corrections similar to Bitcoin. Ironically, the risk of buying Bitcoin is no different than many stocks. Even Target, one of the most stable and large companies in America, has experienced numerous 30 to 50% drops in price, currently down around 60% from its all-time high. People can't retire if their entire 401k gets rug pulled by the president of USA. I understand why people feel this way because they only see a few headlines and think Bitcoin is the same thing as influencer-created rug pulls. Now that banks are moving to the blockchain and entering the crypto space, I think it's safe to say that it's a lot safer to be in crypto in 2025 than ever before. Here's JP Morgan's marketing video for Connexus, its new blockchain technology. A news report in the Wall Street Journal indicated that Walmart and Amazon are creating their own stablecoins to improve customer experience at their stores. I found this interesting. Tether, the company creating stablecoins, made $13 billion in profit in 2024, meaning this is no longer a nascent industry.
I think Bitcoin is digital capital, right? The world's going to be remade. There's a digital transformation in finance taking place. Everybody on Wall Street understands it. Everybody on Capitol Hill understands it. Everybody on Main Street understands it. It's like electricity or fire or the internet.
So the golden age of America is upon us, and with today's signing, the future of crypto and the crypto industry is going to be stronger and bigger and better than ever before.
New industries or technology is scary, and I understand why people have fear that their retirement fund, their most important investment vehicle, is going to zero or they're about to get rug pulled. Nancy Pelosi is known as the greatest trader of all time, and people rightfully complain that she has crazy advantages with her investing. We literally have the President of the United States, we have BlackRock, we have Amazon, Walmart, and others showing you where they're investing their money in real time, and people are worried about getting rug pulled. This is like knowing Nancy Pelosi's trades as she's making them. We've been given an opportunity of a lifetime. It's up to you to take advantage of it. Thanks for watching.